Afternoon, everybody. This is Zoe from Belvoir, and today I'm with my colleague Dean and Sam from Franklin's Financial Services, who are a partner agent of St James's Place. We're just going to sort of run through a few things that are obviously on everybody's minds at the moment in terms of the property market and the industry. Good afternoon, Sam and Dean.
Afternoon. Hey, good afternoon, Zoe.
So before we let Sam crack on and sort of share his expertise, I just wanted to sort of talk to a few of you about some of the things that are cropping up imminently that we all really need to probably be aware of. Now, as we all know, that there is a stamp duty holiday at present until the 31st of March. And this is for properties up to the value of £500,000, which is obviously the Chancellor's way of trying to kickstart the market. Now, what we've all got to be aware of with this is that we make sure that our exchange dates are actually by the 31st of March. Now, the big worry at the moment in the industry is that things are taking a little bit longer than normal in terms of progressing sales. So as a buyer, what you need to be making sure is that you're pushing your solicitor and also you ensuring you've got your mortgage pretty much signed, sealed and delivered. Because the problem you're going to have is if this goes past the 31st, you'll be subject to stamp duty and you will need to find the funds. So obviously this is on your mind and you're worried about this, then please do get in touch. We're more than happy to sort of discuss this matter with you and give you the best advice possible. And now I'll go over to Sam, whose specific specialism is mortgages. But before, could you just explain a little bit about what else Franklin's are able to offer any clients that might be watching today?
Yeah, so at Franklin, we're a full holistic wealth manager is probably the best way to describe it. So if it's got anything to do with finances whatsoever, we can help with it, basically. We can help structure it, advise on it, or really point you in the direction of what you probably should be doing. So we're a bit of a sort of a one-shop for everything, really. So literally any questions on anything it might be, get in touch with us and we'll be able to help you out.
All right. Obviously, your expertise is within the mortgage market. So we obviously have got a few questions that people have been asking us as an agency over recent weeks. So are you all right if I just fire away and you can help us out with some of these queries that people have? Okay. So since COVID began, so we think back to March, if we can all think that far back, has the mortgage market changed much?
It has changed a lot, really, in a couple of ways. So first and foremost, really, we're noticing that the amount of deposit people are having to put down to actually get a mortgage has increased dramatically. So whereas sort of January, February time, if you have a 5% deposit, you'd be pretty comfortable buying whatever you could afford. Now we're finding that the base that anybody would need to buy, especially their first house, is actually 15%. So if you think, come the start of the year, if you were looking at a £200,000 house, as long as you had 12 to 13,000 to be able to get your deposit and your fees together, you'd be okay. Whereas now we're looking more like having 30,000 to 35,000 to be able to afford a house at 200.
All right. Are you finding that a lot of mortgage companies are pulling their products, or would you say there's still quite a few out there, for anybody that's looking to buy at the moment?
There's a lot out there. There's a lot. So mortgage lenders are still happy to lend. The one thing that we have noticed a lot of as well is more in the residential personal buying space than the buy-to-let space is that the interest rates have been slowly creeping up, which is almost the complete opposite to what we're hearing from, the central bank, which is that government interest rates are lowest they've ever been at they're matching the lowest they've ever been at 0.1%. Mortgage interest rates have actually gone up over the last 6 months. There have been, as like you said, the property stamp duty relief. That caused a major sort of kickstart to the property market when we came out of lockdown. So there was a bit of pent-up demand that started to come through. And then as well, having that, people are more willing to look at moving house with it. So all of a sudden, there's a bit of a false economy with it. I'm not sure if you've seen that as well. But like you said, there's a lot of people that are now looking at moving purely to get things in before the 31st of March.
Yeah.
Has there been much change? Oh, Go on, sorry. I was just saying, has there been much change in terms of like the fixed terms? So, you know, you've got like 2 years and 5 years fixed terms. Has there been much like showing space of demand for people wanting a specific length of term as such, or is that not really come to light?
There hasn't. What we have seen is, whereas days gone by, a 2-year fixed term would be sort of here, sort of say 1.5%, 2%, and a 5-year fixed term you'd be paying a lot more for. And we're finding now that that's sort of evening out. So actually, it's almost as expensive to have a mortgage over 5 years as it is over 2. So people now, with the uncertainty that's around and the fact that interest rates really are only going to go one way, we found people are fixing their rates more for 5 years, you know, and taking that longer term view.
Yeah, definitely.
Okay, I've got another question for you. Have you found that investors' attitudes towards buy-to-let mortgages and buying property is changing as a whole?
I think we've seen that it is, because people, first off, they're looking at fixing their mortgages for a lot longer. Because I think as the property market isn't particularly growing at the rate it used to, where people would look to remortgage every 2 years to pull a bit of equity out, they're now looking at taking a slightly longer term view on things. So we're looking more now that people are coming to us wanting the 5-year mortgages. We're also finding that, I think, again, this comes back to the fact that deposits now for first time buyers especially, you know, we're going from 5% to really more like 10 to 15%. So I think we're going to find a lot more people wanting to rent for longer. And we're seeing landlords coming in and buying those, what would have been a starter home for many people, because people are going to end up renting for longer, I think.
Yeah, so you are finding that there are buy-to-let landlords out there still purchasing property?
Yeah, quite a lot.
Yeah,
quite a lot, because I think it's always in times of uncertainty where if people are bold, they tend to do relatively well.
Yeah. I mean, obviously, in this sort of uncertain time that we're in at the moment, you know, a lot of landlords might not be thinking, or even homeowners might not even be thinking about remortgaging or releasing equity. What would you say about that? Would you say now's a good time to do it? I mean, obviously, we're unclear what's happening from day to day at the moment, but is it now a good time, do you think?
I think it's always a good time to have a review of where you are. I think that's probably the best thing that I'd say. If you've got a little bit of time left on a mortgage, or, you know, if you're suffering debts from other areas that you didn't know you could do anything with, I think it's never a bad time to review where you're at. Because the best thing almost that people can do, especially from our side, is get in touch, and we can go through the position that people are in. Yeah. And it might be that nothing needs to happen for a little while. Okay,
and obviously with the company that you work for, if, for instance, we've got a particular individual that might be watching today that not necessarily it's just about his mortgage or their mortgage, that they might have concerns about, maybe, I don't know, their pension or getting their will up to date, or even just worried about, like, you know, inheritance tax, which obviously dovetails in with wills. Is that something that you could look at, like, say, maybe their whole portfolio in terms of, you know, their finances? Are you able to sort of look at that whole thing and make sure everything balances out together?
It is. I mean, that's sort of where our forte as a company is, because as opposed to having somebody that purely would look after your pension, somebody else that would look after maybe your ISAs, someone else that you'd speak to as just a pure mortgage advisor, we look at everything together. So we do look at, it's almost the old saying of you start with the end in mind. So realistically, if you've got ISAs, you've got a pension, you've got a buy-to-let, let's say, there's lots of fragmented pieces to what you're trying to achieve. So almost, this is where,
I mean, without sort of getting into detail, because obviously, you know, confidentiality, etc. Have you got any examples you could draw on where you've saved people shed loads of tax money, or just money in general? You know, can you think of anything that's happened where, you know, someone's sat down with you and then had an absolute revelation that you've managed to save them a load of money?
I mean, it's not just the money that we can save, but the thing is, so like we've had before, someone that's come and they've built up 6 buy-to-lets, and they've come in and they've said, right, I want them, they're going to be my plan. Okay, I said, right, well, what is it you're planning to do? I said, well, we're going to do another 4 or 5 years, and then we'll have all the mortgages paid off, and then we're going to sell all 6 of them, and then we'll have sort of like 600,000, 700,000, and then we'll be able to retire on that. So that's then when we've sat down and gone, well, what is it you're trying to achieve? So instead of selling all 6 in one go, because if you've had properties for a large number of years, you're going to more than likely have a capital gains tax issue if you sell them all in 1 year. So in that particular instance, the client wanted an income because they were looking to retire. So we looked at, instead of selling all 6 in one go, to then have a big pot of, somewhere in the region of about $750,000 to invest, and then try and gain an income from that. We've looked at selling some properties over multiple years. So it's a husband and wife, so they've each got £12,500 capital gains tax allowance. So the first £25,000 you make on in the world, in the country, that is free of capital gains tax for them. So instead of selling them all in one go, we're looking at a staggered approach where we can do one each year. And then on the rest of them, instead of selling them, we're going to look at an interest-only mortgage to then release some funds from them and invest that way. So the capital gains on selling them all in year 1, based on where they sold them, that have probably been getting on for £40,000, £50,000 that they'd have paid just to sell the property to have the money to invest. By doing it on a staggered approach, I think in the end they're going to end up paying very minimal each year, and there's actually the plan that they'll have the income each year to afford to do what they want to do. Yeah.
So it's almost going back to what you said earlier about starting at the end game and working your way backwards to make sure that you get what you want on your bucket list, maybe retiring to a desert island somewhere or whatever.
Well, I mean, I don't know what the weather's like there, but here it's grey and rainy and horrible, and think, well,
it's not any better in Bedford.
No,
I mean,
it's not.
One thing that's sort of a very popular issue in Bedford at the minute, and I might just sort of be throwing this out there and catching you out a little bit, I don't know, is we went through a phase where we had a lot of landlords investing in HMOs, houses of multiple occupancy, but they were putting them in a company name because they thought that would be better or more beneficial for them. Is that still, is that the case, or is that a bad idea, would you say?
Again, it very much depends on the individual and what their circumstances are. Because limited companies for property investment can work well. I mean, as you've probably seen, well, you guys don't know anyway, but the interest rate relief, that's down to basic rate. So what I mean by that is you used to be able to, the money you had in from your rent, you can then obviously write off all your costs against that over the year from a tax point of view, and any interest you've paid, and then you just pay your tax on the difference. What's happened now is because a lot of people that have got buy-to-let properties are outside the basic rate tax band, and the Chancellor realised that there was an ability to gain a load of cash by actually saying, well, instead of giving you all interest rate relief at whatever your tax band is, we're just going to change that so everyone just gets it at a flat 20%. So because of that, and then the ability to not just write off all works that's carried out on properties over the year, people have started moving properties into limited companies because you can write all these things off.
Right.
So we did see, once this first started, a lot of people were moving towards limited companies to put properties into. It can be right if you're in the right position with it. But again, you've still got issues with how do you get the money into the company? How do you buy the properties when they're in there? Because they still get the 3% stamp duty charge if you buy a property in a company. You still got to pay corporation tax, and then you've got to do something about getting the money out of the property, out of the company, to actually be able to spend it. So we've still seen it quite a bit.
Yeah.
But the other thing that's changed quite a lot over COVID is the interest rate for mortgages within limited companies. So if you have a personal buy-to-let mortgage, you're looking at around about 2% interest a year. Put that into a limited company and you're looking more like 3.5 to 3 and 3.75%.
Right.
So really you need properties that are very high yielding to be able to put them into a company to still come out at the same sort of position.
Right, it's interesting. Now, one of the things that always crosses my mind, and obviously conversations I have with some clients, is you'll get the response, I don't need to speak to somebody like St James's Place because my local IFA will be able to help me with this. How do you differ from some local independent financial advisor?
Well, putting us on.
What's your unique selling point, mate? What's...
Well, it's like from anything else, we're just better. So, no, I mean, the thing is, the St James's Place approach on it is completely different. So in terms of your local IFA, you're talking about somebody with one office where they're doing all the due diligence on every investment, on every mortgage provider, on whoever they want to provide their insurance through. We have a 100 company that stand behind us that do all this for us. So we only offer insurance and mortgages through, it's not that they're not reputable companies, but through companies that show a good record of whatever it is they're doing. So on the insurance side, whether that's making sure that if a claim comes in, so long as we've been open up front with putting our application in, they pay out. You know, St James's Place have got a guarantee as well, which no other IFA company has. And that's that if anything happens, like say, we've been, say for insurance, for example, come to the end, somebody unfortunately passes away and the life insurance company won't pay out because of a reason. So long as we've done everything that we've disclosed was what needs to be disclosed, you know, and everything was true and honest, St James's Place would actually step in and make up for the fact that the life insurance company haven't paid out.
Yeah.
So we have that on one side.
Yeah. We
also then have, like I say, the FTSE 100 company where they do have, give or take, about 120 billion under management. From an investment side of things. And
so you're better protected in some respects then than somebody who's got an independent on their own that may not have that sort of backing.
Far better. Far better.
Right. And I suppose if there's anybody watching today that maybe has any worries about anything financial, that you're more than happy for them to drop us a line through the direct message or put a comment in the comments, and we can obviously reach out to them and hopefully speak to them about any issues that they might have. On the mortgage front, is there anything else, Sam, that you think that the punters out there need to know at the moment? You know, any sort of headline news that, you know, they might need to be aware of?
Not a lot. I mean, I think the mortgage market has definitely changed this year. I think COVID has allowed mortgage companies to test where the waters are. So, like I say, interest rates have gone up, even though the base rates through the government have gone down. And I think it's almost a stage that one company's tried it, they've still got interest at that level, so everyone else has followed. You know? I think affordability criteria is going to get more stringent, purely because they're going to be worried, as we've seen with COVID. I think we are going to see a lot of unemployment starting to come through.
I mean, sorry, I'm cutting you off, Dad. If you had a mortgage now and you were literally on furlough and potentially you're going to be off that cliff edge at the end of this month, is there any advice you could give to any of those people out there that might have that on their minds, what they could do? I mean, and obviously there has been the mortgage holiday situation, but you know, if someone there is watching now who's sitting at home and is worrying about potentially losing their job and having a mortgage to pay, is there any advice you could give them at the moment?
I think the best advice I could give is to try and get in touch with somebody that can help. So with this, finance is a really funny area because anybody with a little bit of knowledge will express an opinion to you. So you'll always hear you can't get a mortgage if you've been furloughed, you can't get a mortgage if you're unemployed, you can't get a mortgage if you're on benefits. You know, don't even think about talking to the bank about it because they'll just pull the mortgage. And the thing is, there's a lot of things that people think that unless you've spoken to a professional about it, there's a lot of hearsay. So people will quite rightly be worried about the position they're in.
Yeah.
But reach out and speak to somebody that actually knows what they're on about.
Yeah, don't listen to Karen on Facebook. Is that what you're basically saying?
Yeah, basically, yeah.
Professional advice.
Professional advice. I mean, the thing is, if you found a funny lump on your body, you wouldn't go around 10 or 15 of your friends saying, "Do you know what this is?"
Exactly.
And when they say, "Oh, it's such and such," you wouldn't take that as gospel. You go and speak to a doctor who would then refer you to a specialist. Yeah, with finance, it's okay for us to speak to 3 people and say, oh, you know, such and such happened by mortgage, you know, and Dave and his mates down at the pub will go, oh, well, you know, you need to do this, or it's all right, just don't talk to the bank, and they'll never know it's happening. And the thing is, what we have seen, especially because all the banks offered the mortgage holidays, as much as they will probably be more lenient in terms of getting a new mortgage, they're going to really want to help people, because they're not going to want to try and, you know, repossess houses if people fall behind. They're going to want you to talk to them beforehand. And the earlier that you can speak to anybody, if you've got any problems, the better it's going to be for you.
Is there anything else?
It's just don't suffer in silence.
Sorry, Sam.
Pardon?
I thought you were still talking. I apologise.
Yeah, no, sorry, I was just saying, I think the biggest thing to say to people is just don't suffer in silence.
Yeah.
If you do have, you know, any questions, or if you are worried about what your circumstances might be, reach out.
Okay, fabulous. Well, is there anything else, Dean, that you pressing on your mind about mortgages that you want to ask?
No, say from my point of view, I've recently remortgaged myself, and I've noticed, as you said, the rates have changed, and we decided to go for a longer term fix for that security in that sense, because we don't know what's going to happen in the future, but it was just a personal preference at that time. So, but no, so it's just interesting to hear like the actual what is going off across the country and with regards to all of the mortgages and interest rates. So it'd be interesting to see what the future brings with it as well.
It is. I mean, the one last thing that I'll probably say is, when people think about mortgages, they also think about their protection they have with it. So their sort of life insurance and critical illness. And the one thing that I would make sure to say to people is, if that's more at the forefront of your mind now, act on it sooner and speak to somebody about doing it properly. You know, it's all great going online on to go compare, but what are you actually going to get from it? And as well, if you did have confirmed COVID, you wouldn't be able to get any type of insurance for at least 12 months. So really, again, if you're in the thought of, oh, we thought we'd get the mortgage and then in a few months when it's all settled down, we'll sort out our protection with it, you know, that's something that really needs to be at the forefront of your mind now.
Okay.
Yeah, definitely. Yeah, thanks
very much. Yeah, I appreciate your time today. We are going to try and do this on a more regular basis. So if there's anybody watching that's got any pressing issues or wants to know more about anything property related, or if you want us to get any particular experts in front of you, then please do let us know and give us a shout. Like I say, we're probably going to do this at lunchtime pretty much as often as we can now, just to sort of keep everybody informed and keep the information flowing, because it does change on a daily basis at the moment. Every day there's something different happens, and we just want to make sure everybody's informed. So hopefully we'll see you again. And like I say, reach out if you've got any questions. Thanks very much. And thanks to both of you today. I really appreciate it.
Thanks.
Thank you.